Hello, everyone, and welcome again to our Environmental Insurance Power Panel here at Insurance Business TV. Yes, this is where we gather some of the biggest names across the sector, this time to examine the state of the market. Let's meet them again, shall we? We have Shauna Larvey, who is SVP, National Practice Leader Environmental at Gallagher. Amanda Modica, Director, Head of Environmental and Professional Broking at WTW. Shay McCarthy, Vice President Complex Risk at Hub International. Aaron Weinstock, National Practice Leader Environmental at BFL Canada. And Justin Perry, SVP and National Practice Leader Environmental Risk Solutions at Aon. So as I said at the top, in this edition, we're going to look at the state of the environmental insurance market. And with that in mind, in a recent Lockton report, the market was described as being robust with pricing generally stable. So I'm going to ask each of the panelists, is this something that you would agree with? And where are you seeing price fluctuations, if any at all? Sean, why don't you start for us?
Thanks, Paul. Yeah, I generally agree with the statement. There are certain deviations that we're seeing when you're looking at certain circumstances, especially when you're looking in those high risk and complex sectors, for example, energy or potentially real estate risk. And a lot of it really comes down to, the accumulation of losses on the program. And that really drives the price depending on how bad those losses are. So, markets are continuing to look at their return on investment and being more strategic and more calculated on the risk. But, generally, we're still in a pretty soft market. So, there's going to be a large variance on, new business risk that goes out to market. We've had some clients that have entertained multiple options and you've seen up to like 100% premium disparity. So, it is still, a lot of fluctuation in terms of how individual carriers are looking at it. But generally speaking, on the less complex stuff, we're seeing some consistency.
Okay, so a soft market, but with still a fair number of fluctuations. Aaron, does that mean that underwriters are working hard at the moment?
Yeah, that's it. So yeah, I agree with what was said previously that pricing is generally stable. Despite the loss cost trends that have been increasing, markets seem willing to do what it takes to keep accounts from being marketed due to the pressures that they know they'll get from other insurers and the robust capacity that is out there. So in some instances, we have been seeing decreases for that reason. But despite this flexibility, a lot of accounts are going to market and underwriters are working flat out to keep up with their renewals as well as in quoting the new business volume that they're seeing.
Okay, and Amanda, from your perspective, is there a lot of capacity in the market right now, I suppose, both locally and from elsewhere?
Absolutely. A ton of capacity out of Canada, the US, and the UK, and new entrants are continuing to try and get a piece of that Canadian book of business. And to Aaron's point, I think that's really why the insurers are working so hard to make sure their accounts are not going out to market, and when they are, really fighting to keep them, but as well being really aggressive on new business to try and build their existing books.
Okay, and Shane, just to take it to you and to go back to the original question, would you agree with the statement that the market is robust?
Yeah, I mean, if we're looking kind of in the definition of robust, it's able to overcome adverse conditions. And I question if, the pricing over the last 6 months continues, whether that book of business is able to overcome adverse conditions, such as significant losses hitting those books. So, only time will tell, but I'm interested to see how it plays out as everyone's hungry with capacity to write these risks. So.
And Justin, just to get your views as well, I mean, it seems like overall pricing is diminishing, but that doesn't mean that you can overlook some of those more complex risks, does it?
Yeah, certainly, Paul. I think that the overall market has a lot of overlap in capacity. So simple or more straightforward risks have ample capacity, ample markets competing for the business. On the flip side, the more complex the risk, the more insurers are selecting where they want to play, who they want to partner with, et cetera. So the appetites are evolving, very small tweaks leading to less and less capacity for complex risk in the way that the risk wants to be transferred.
And just to stick with you as well, Justin, if you don't mind me zooming in on a more specific market, because that same Lockdown report didn't bring up that median pricing for pollution legal liability was up, but not by much. The market was described as competitive. So does that mean that brokers will show their value really in relation to terms and conditions? And if so, what should brokers be looking for or addressing in order to stand out?
As the rest of the property casualty market is stabilizing, environmental markets are able to understand what is in scope and out of scope and backfill some of the limitations that have been applied in the other markets, which is how the environmental market has always played. So for the smaller, less complex types of exposures, the insurers can really differentiate themselves with advancement of the form in the nuances. In the complex area, it's around what is transferable. So I think the overall median is actually dropping, but as you get into complex risk, it does stand on its own. It is going up.
Okay, so Amanda, it sounds as though there needs to be some working hand in hand here with P&C brokers. Is that right?
I think that as brokers, we just can't look at the pollution policy and placing it in isolation. You really need to look at it hand in hand with the rest of their program. So that means working closely with your property and casualty broking colleagues, understanding the nuances of coverage in terms of pollution, whether it be waste or sudden and accidental cover under those other policies in their program to see where those gaps can be filled and where you can enhance the program from a pollution perspective for your client.
Yeah, such a great point there by Amanda, Aaron, about the fact that you've really got to focus in on all those nuances because there's no standardization here, is there?
Yeah, that's it, Paul. There's not a lot of standardization in premises forms, and so there's not really a magic endorsement that will address all the terms and conditions you might need to on a given risk. So to that end, brokers can really stand out by being able to present the risk well to the underwriters, to communicate the client's objectives, and to understand the coverage that is available in the market. So ultimately, what stands out is having a deep knowledge of environmental coverage because there really aren't that many specialists like us out there to navigate the risk.
Yeah, and I guess, Sean, it's on specialists like all of the people on this call to really identify those gaps, isn't it?
100%, Paul. Echoing Justin and Aaron's response, especially when you're bringing on a new client or a new program or potentially, a program that hasn't been visited in a long time, it's really understanding and identifying where those gaps are as specialists and looking for partners in the market to kind of fill in those gaps or create value and explain what is and what isn't covered. We've had some great examples with some of our market partners that they've been able to kind of backdate coverages for a long period of time where the insurer never had coverage in the past. So, out of the box solutions are always welcome.
And I guess we're looking for value adds as well here, Shane, perhaps risk management services?
Yeah, I think that's where you can differentiate yourselves as well, is having experts on the risk management side, claims advocacy side, and someone in your corner that can help with advocacy or keeping you educated as far as emerging trends, regulatory compliance, those kind of issues outside of just your policy wordings.
Well, let's zoom in on some of the exposures now. Of course, we did discuss PFAS at length in the previous edition, which is still available at Insurance Business TV. But are there any other exposures that are becoming increasingly prominent and that brokers should be paying attention to? Aaron, any that stand out for you?
Yeah, one of the ones that I've been hearing a little bit more about and seeing articles about more recently is a chemical called 6-PPDQ, and that is a chemical stabilizer that is found in vehicle tires. So to me, it rhymes a little bit with PFAS, maybe not in its ubiquity and complexity, but, when tires wear down, the little bits of plastic end up in the environment, and it is toxic enough to kill fish. And, because cars are driving everywhere, the rain comes down and washes the particles off the road, it ends up in places it ought not to. So it is interesting to insurers, again, because it could be quite widespread if it ever becomes more tightly regulated, and it is on the radar of the U.S. Environmental Protection Agency already. Insurers haven't taken any action. They haven't really done much with it, but they are monitoring it. And so we'll have to just stay tuned and see what happens for the coming years.
Okay, 6-PPDQ is certainly a new abbreviation for me. Justin, have you got a new contaminant to throw at me as well?
Certainly, yeah. I think we have a handful that we're tracking, all of us collectively in this room. But ethylene oxide is another manufactured product that is, getting a little bit of attention on the manufacturing side, has having to do with air emissions at the production facilities and in the use cases. It is very limited, though. And then others that are on the horizon are various phthalates. Where that we're expecting to see go to court at the end of 2025. So there's a lot of attention right now on those chemicals.
Okay, and Shane, I mean, I'm getting a lot of new names for me at the moment. Have you got one for me as well?
Yeah, I think I'll simple it down a little bit, and I'll just put a broad spectrum on the electronic waste, if you will, e-waste. The volume's obviously increasing, and I don't see that diminishing. So it's really about kind of improper disposal of that waste, and then heavy metal contamination that can come from that waste. It's already pretty regulated, but with regulation comes fines, and so that's one that I don't really see going away anytime soon, and we can easily pronounce it. So.
Yeah, that's one much simpler for me. That's very much appreciated. But it kind of raises a great point as well, doesn't it? Because when there is electronic waste, I mean, that sort of goes hand in hand with the increased use of technology as well, which is another factor that we need to be thinking about, Amanda.
Yeah, so that ties in a little bit to how I interpreted this topic. And information is so easily accessible, so easily distributed, and technology is literally at everyone's fingertips. So information can be moved around very quickly, and it's not necessarily a new or emerging contaminant, but perhaps more of a consideration for our clients is their brand or their reputation, their public image. If there is a loss or an occurrence or a pollution condition that makes the news, or there's a viral video, you really need to look at protecting your brand and your reputation online, because information spreads so quickly. And a lot of our pollution policies do have an extension for crisis management, so services to assist with helping maintain and restore that public confidence.
Okay, and I suppose, Sean, just to bring you into the conversation as well, I mean, so many new contaminants out there, so many factors to think about, including technology, of course. What do brokers need to be focusing on?
Yeah, so I think the number one thing is our own E&O. When you're taking a look at your clients' exposures and their existing policies, it is important for you to be able to identify the risk and communicate that to them. But also understanding that not everybody knows everything, and so engaging your specialist and tackling some problems such as like pre-existing conditions or due diligence that are available by the client to help transfer risk. Those things are equally important to protect your E&O and manage your client's expectations.
Okay, and if you don't mind, I'm going to take the conversation a little bit to the left here. But there's, of course, increasing pressure on companies to address ESG issues at boardroom level. So where do you think that companies are going right or wrong in their approaches to ESG so far? Shane, let me get your thoughts on this.
I mean, I think we get caught in the crossfire of the ESG conversation just because of the E at the start, but I'm far from an ESG expert. But, practices of ESG, proper ESG can see 3% or higher stocks increases. So, but at the end of the day, I have a little bone to pick. Is a company is purchasing an environmental liability policy solely to improve its ESG score, but it continues harmful practices and relies on the insurance to cover its potential risks. To me, that's greenwashing. And so that's, a little bit of surface level compliance obtained through a liability policy isn't genuine environmental protection measures. So that's presenting environment. It's just not a significant initiative, and it's misleading the public in a sense, if that's really what they're choosing and how they're trying to tick that box.
Okay, I like that. So Shane is basically saying ESG, don't lump it in with insurance. Do you agree?
I don't think in particularly you're looping them in together. Obviously, there is a risk management piece to every company's business, but when you look at it on a micro level, you're trying to figure out where your client is on that journey for ESG. When we look at companies, they're trying to improve their risk management measures, but there's also a level of prioritization that comes with that. Everything costs more money. There's resources attached to that. So, every single company is on a different path and a different level of sophistication in that space. When you look at it like more on a macro level, we've seen a lot of like the governance milestones, and we've seen a lot of global events that have contributed and helped shape ESG and the importance of it. But we have to continue to speak with our clients around their policies and procedures. Every company that is considering ESG needs to hire the right skill set, establish a framework for it, and incorporate it into their strategy. So it isn't a silver bullet, but insurance is only one part of that risk management piece.
Yeah, I think that's a great guide. And Aaron, are there any particular questions that organizations should be asking themselves?
Exactly. So building on what Sean was saying there are a couple of key questions that organizations can consider. So for example, how has ESG been considered by the board when they've been developing their medium to long-term strategy? Has the board been involved in the identification and assessment of ESG related risks? And has this been included in their more general risk profile? And then finally, have ESG drivers and risks been incorporated into the company's performance measurement and reporting? And frankly, does the data exist to even support verifying their performance? So that's the type of things I'd be asking myself as a business owner.
Yeah, those are great questions. And of course, you brought up the data point there. Justin, I mean, this is really all about data collection, isn't it?
Oh, very much so. ESG is to understand how a company is performing in various metrics, knowing that there is a commitment from the board level to collect that data, to do something with it, and then to apply its learnings is really a key measure. So environmental is just one of those, but it shows in what we all do that data collection and application of the learnings is the key differentiator for us. So knowing that there are policies and practices in place, such as risk management practices and environmental management policies, et cetera, is critical. So ESG does play a factor, but I would say that we're not directly correlated.
Okay, and that's, again, a great point. There is no direct correlation there. So where does insurance fit into the equation, Amanda?
Similar to the opinion of my peers, we definitely do see a little bit of overlap. And I think that's truly with the physical risk. And that's the part of the ESG that we as brokers can assist with. So think about climate change, severe or named storms, and how we, from a broking insurance perspective, can underwrite that physical aspect of the risk. And then to Justin's point, helping to facilitate those conversations beyond just the risk management department, beyond just the legal department, to have a broader net of feedback to really look at underwriting that physical risk for our clients.
Right, well, we always like to wrap up our conversations the same way, which is, of course, by leaving a tip for everybody watching. So I'm going to make it a little bit more specific this time. Do you have any tips that you share with clients to improve their controls and response plans in general? Amanda, I'll start with you.
Playing off a tip I believe I gave previously, it's really looking to utilize those resources you have available to you. Brokers and insurers have services to support their clients. There's lots of platforms available, for example, that pull data analytics for not only historical loss experience, but live event tracking for severe weather, for example, to proactively manage the extent of your potential loss. So incorporating those tools into your emergency response plans, for example, when there is a named storm event looming, is really important to get ahead of it. And using that information that's available at your fingertips from your broker or your insurer partners is key.
Okay, excellent tip to kick us off. And of course, a nice reference there to the fact that you can see the previous tips still available at the library at Insurance Business TV. Justin, let's get a tip from you next.
Yeah, to build on what Amanda said, it really is around understanding your organization, your culture. So if you're building in risk-conscious colleagues at all levels of the organization, it becomes part of the goals, reporting obligations through all levels of the organization, which lead to data collection as well, et cetera. That really helps with building your environmental framework. It also probably helps with part of your ESG framework. And so I would say that that's critical. Understanding how that overlaps with external factors, such as name storms, like Amanda was saying, wildfires, et cetera. How is your business going to react to external factors is also very important.
I think we can all relate to the idea of having some not so risk-conscious colleagues. Aaron, let's get a tip from you.
Yeah, I think this sort of ties into what Justin was saying there. There's a lot of value in taking a systematic approach to environmental management. So identifying and managing environmental risks, then focusing on a cycle of continual improvement. And that's sort of what the ISO 14000 standard achieves. That's really sort of not an insurance thing, but it's sort of an environmental risk management tool that's been available for years now. And so, I'm not saying getting to the point of certification is necessary, but there is some value in the philosophy that it employs. And again, even employing a environmental management system in a more formalized way, just without even having to be certified, would improve upon a business's controls and response plans for sure.
Okay, of course, a cycle of continuous improvement is something that we could all apply to our lives, perhaps. Shane, let's get a tip from you.
Yeah, certainly. I think, we're talking about all the response plans, environmental management plans, but it's really also your record keeping. So I touch on the documentation and record keeping and making sure that that's up to it's as detailed as possible. And, these some of these things end up in court quite often, and, they're looking for as much information as possible. So kind of save your own bacon a little bit by making sure it's well documented and you have a safekeeping of those records.
All right. Keep your note keeping up to date, everybody. Sean, let's get a final tip from you.
Yeah, kind of piggybacking what Aaron had already mentioned, one small piece of that is making sure that with any kind of near misses or incidences you've had at your facility or throughout your operations is doing a root cause analysis, trying to identify what the root cause or source is of a potential EHS issue. Those learnings are also important in terms of transferring risk and market selection and whether they'd be willing to take on the operations that your business are doing. But, all of that really comes down with, like Shannon mentioned, like good record keeping and good conversations with relevant stakeholders, right? So if you have a change in your operation or you are acquiring another asset, keep the right people in the loop, keep your consultant in the loop for regulatory or compliance reason, keep your broker in the loop for risk transfer solutions, and, continue to communicate and monitor.
Yeah, excellent thoughts and another terrific panel. Remember that this band will be back together again just one more time in 2024. So keep your eyes peeled for that. And until then, of course, keep it right here at Insurance Business TV.